Margaret, we're ready to get started.
Terrific. Thank you, Sophia. Well, good morning, everyone. My name is Margaret Myers, and I direct the Asia and Latin America program at the Inter-American Dialogue. Thank you all so much for joining us this morning as we consider a question that is on my mind, certainly, but also on the minds of many in Latin America and the Caribbean. And that is, to what extent we will see considerably more Chinese engagement in LAC, economic engagement in particular, in the midst of and indeed following COVID-19. Given China's relatively solid economic performance of late, as the only country that will actually grow its economy this year, Chinese companies are presumably better positioned than many others to engage overseas, including in the Latin American and Caribbean region. Some Chinese companies may also be very well positioned to acquire new projects as other international or domestic companies potentially sell their assets or leave the region altogether. That said, although China is performing relatively well, it's also grappling with a range of structural economic problems at home, and which may very well impact, and indeed already has in certain cases, Chinese companies and banks' ability to go out more extensively, especially at the same levels that we've seen in the past. And then, of course, COVID-19 has taken a real toll on the investment environments in many Latin American nations. Foreign direct investment in the region will fall by 50% in 2020, according to CEPAL. Will Chinese companies, with all of this in mind, lead the charge, so to speak, in 2021? Or will they wait, like many others, to see how things develop? And how will they view Latin America in comparison to African or other investment destinations? Here to help us examine prospects for future Chinese economic engagement in Latin America are four expert panelists. In the interest of time, I won't go into much depth on their very impressive backgrounds, but I'd certainly encourage you all to read their longer bios on the Inter-American Dialogue website, which are accessible from the event page. But let me extend a warm welcome, first of all, to Xingjian Jeff Zhao, who is head of the China practice at Diaz-Royce LLP and is joining us today from Shanghai. So thank you so very much for being here, Jeff. Claudia Trevison is executive director of the China-Brazil Business Council, joining us from Rio. Jose Valera is a partner in the Houston office of Mayer Brown LLC and a member of the firm's Global Energy Group. And Evan Ellis is a research professor at the U.S. Army War College Strategic Studies Institute. And for anyone who follows these things, is an absolutely prolific writer on China-Latin America relations, among many other topics. Before we get going with the remarks, I would encourage any participants to please submit their questions through the Q&A feature on Zoom, which is located at the bottom of your screen, or else on Twitter using the hashtag ChinaLAC2020, or by email using meetings@thedialogue.org. So let me go ahead and start things off with a question to Xinjian, Jeff, if you don't mind. We certainly continue to see a degree of Chinese investment in the region, especially in infrastructure, often related to food or energy supply chains, or in projects that employ Chinese technology, as well as in many other areas. But what sense do you see, sort of on the ground in China at the moment, of the overall willingness of Chinese companies to go out, to continue going out, whether in Latin America or other regions at this particular point in time, taking into account, of course, the economic challenges that China is facing at home? Is there considerable interest at this juncture? And if so, are certain companies or industries in China better positioned to engage overseas than others? That's a bit of an extensive question, but let me turn it over to you for some initial comments. So thank you.
Thank you, Margaret. Again, it's a pleasure to be here tonight, this evening, or the day for you. I think I think this question, it raises many important issues, sometimes thorny issues, but I can't stop thinking about what Shakespeare once said, and that is, "What's in the name?" Because I think we should be careful, sort of as at a starting point, to not conflate the Belt and Road Initiative with a lot of other longstanding bilateral treaties and cooperation agreements that China has entered with various governments around the world, including in Latin America. And the catalyst, the primary catalyst for a lot of ongoing opportunities and projects actually arise from those pre-existing bilateral treaties rather than from parts of the initiative that we talk a lot about lately. So the elephant in the room, in a lot of ways, in both the Chinese on the ground here in China and also in other parts of the world, especially in countries that are heavily engaged and heavily invested in this initiative, as well. What exactly does the Belt and Road actually cover, and what does it actually encompass? And although China has been doing a good job, I would say, at clarifying this in recent guidelines and documentation, the ambiguity still remains. And many things predating the initiative are still being framed under it in various ways that can be misunderstood. With that being said, I think there's been a big shift in obviously economic patterns in terms of how China has exported its resources, and in terms of how China has decided to reinvest, I guess, in the region over the course of the last fiscal year. And I think critical to this is are two industries. One is the so-called health Silk Road, which is obviously not part of the initiative as it was originally understood and written, and it's part of China's push for soft power around the globe in terms of providing critical medical equipment, access to doctors, access to vaccines, and access to PPE, obviously, to deal with the pandemic. The other initiative here is the so-called digital Silk Road. And in terms of long-term shifts in strategic investment in the region from China, I think this should be the core focus, because Chinese companies are already very well established in the region, including companies such as Huawei and ZTE, even Tencent and Alibaba. So Latin America would be a natural fit for expanding their activities given the shifting global supply chain patterns and global trade patterns, and particularly the shifts that have been brought about by the pandemic. And and this would apply both in terms of working with Latin American governments in the medical technology sector, as well as in sectors such as law enforcement, surveillance, and e-commerce. So I think there's a lot of opportunities. There's certainly continuing strong interest here in China to reinvest in the region, to sort of recalibrate the approach to trade with Latin America. And I think, in my humble opinion, the pandemic has brought about a pause, but by no means any sustained long-term stoppage in the acceleration of investment from China to Latin America.
That's terrific, Jeff. And by recalibrate, do you mean sort of balance the relationship, to invest in sectors that will be promoting of more in the way of manufacturing growth, so that, or there's a prospect for exporting more in the way of value-added goods to China, or is it in some other capacity?
That's exactly so, Margaret. And I think, in particular, I think the pandemic is an opportunity for everyone to take a step back and say, well, what has worked under sort of the nascent stages of the Belt and Road Initiative and what hasn't. And it certainly has exposed, a lot of issues that may have been more long-term without the pandemic. Issues regarding debt financing, for example, that has been brought to the forefront, by the situation. It's also important to note that from a diplomatic perspective, 70% or more of the Latin American economy are still officially not participating in the initiative, although there are, as I mentioned, various bilateral treaties that are giving rise to existing investments. So countries such as Argentina, Brazil, Mexico, and Colombia, the four largest economies in the region, are still, absent from the initiative. So I think there's a lot of work to be done, both diplomatically and on an investment sort of economic level to make up ground.
That's terrific. I mean, I think it's a really important point to note that not everything, in terms of engagement with Latin America or other regions is necessarily BRI dependent, but that there are a lot of other factors that contribute to and promote investment in the region. That's really a critical point, as well as your point that this is indeed a sort of BRI is an evolving concept, and now we have these, digital Silk Road, health Silk Road that are driving a lot of the more recent engagement in the region. So thank you so much. That's really, really fantastic. Let me turn to Claudia now, and I'd like to ask you more or less sort of the same question, but focusing specifically on Brazil. Can you give us a sense of how things are kind of looking in Brazil? Certainly, we've seen some contentious politics that that many are aware of, but also a fairly quite a lot of fairly recent investment in a range of sectors, and of course a lot of trade. Are you still seeing considerable appetite for new opportunities among Chinese companies, whether those that are well established or relative newcomers, and if so, in what areas?
Mm-hmm. First of all, I'd like to give a perspective of Chinese presence in Brazil in terms of investment, because I think it sheds light on what we can expect for the future. And in the last 15 years, in particular in the last 10 years, China emerged as a very important source of investment for Brazil. And it has rivaled the amount that was invested in the country by the United States in the same period. And so China is very important to Brazil, but Brazil is also very important to China as a destination of Chinese investments. When we look at the China Global Investment Tracker, we see that Brazil is number 5 in the ranking of the main destinations of Chinese investments. Brazil is behind only the United States, Australia, Britain, and Switzerland. And it's ahead of Canada, Germany, Singapore, Russia, and France. And for some Chinese companies, Brazil is the main destination and has the main share of their assets outside China. For State Grid, which is the largest electricity company in the world, 45% of the assets of State Grid outside China are in Brazil. For China Free Gorges, Brazil is also the main destination of their investments. For Sinopec, Brazil is number 1. For Sinochem, Brazil is number 1. And the Chinese investments, the first wave were much concentrated in oil, mining, but it has diversified over the years. And one area that got a very strong share of the investments is the electricity. 45% of Chinese investments in Brazil are concentrated in generation, distribution, and transmission of electricity. The oil sector appears second with 25%. And we have seen in recent years investments in new areas, especially technology that is growing a lot. And I think this is one area where we can expect an increase, especially with 5G. and not 5G itself, but with the advent of 5G, that we are going to see a bigger symbiosis between the physical and the digital world. And I think China is very well positioned and has an interest to make investments in these areas, in push its companies, technological companies abroad. But other areas that we are going to see a bigger Chinese presence is infrastructure. That is already an area that China is present, especially in electricity infrastructure. But we are going to see, I think, an interest in the logistics part of infrastructure. We are going to see more investments probably in industry and in financial services. We have Tencent invested $108 million in Brazil, the largest fintech of Latin America, which is Nubank. And Ant Finance invested $100 million in an online payment company in Brazil called Stone. So I think these kind of investments are going to grow. And a new area where I think we already saw Chinese investment, there was one investment from Guizhouba, is water and sanitation. Brazil just approved a new law for concessions of water and sanitation. Brazil has a huge demand for water and sanitation. Half of the country does not have access to good water and sanitation. And this is an area where China has interest. And in the next 2 years, Brazil will have auctions for concessions of many services, public services that can be transferred to the private sector. And the expectation is that Chinese companies will show interest in them. I will stop here, then we go back.
That's terrific. Thank you so much. And so Guizhouba actually won that bid to do that work already? Or
actually, Guizhouba bought an asset that was owned by one of the construction companies hit by car wash operation.
Okay, which we've seen, in other sectors as well across the region, be it hydropower and other areas. That's terrific. Thank you so much. That was extremely helpful. Claudia. Jose, let's turn to you and focus a little bit on the energy sector specifically. What prospects do you see for continued Chinese investment in Latin American and Caribbean energy markets, whether through acquisitions or greenfield investment? I mean, is oil and gas investment still of considerable interest to China, or has that that demand been affected somewhat by conditions at present? Or will we mostly see a continued focus in areas like renewables, where there's been actually quite a boom in activity in that area as well, in Brazil and in some other places? Or electricity transmission, of course, and generation and hydropower have also been sort of prominent areas of focus for Chinese companies in recent years. What are your thoughts?
I see a continuation of these trend in investments in both hydrocarbons and electricity throughout Latin America. China has a deficit in oil and gas. It's a net importer of those resources. And in connection with Latin America specifically, the investments that China is making in the hydrocarbons area, in a way, accomplish two objectives for China. One is obviously procure resources through their investment in trading activities to bring home. But second, this is an opportunity for China to learn, to obtain technology and learn know-how in the development of resources located in areas that are challenging for China. Specifically in the case of Brazil, their investments in the ultra deep waters in the pre-salt area are tremendously important for China because it will enable them to learn how to step out in their own offshore developments, seeking more production from those areas. In the case of Argentina, for example, is a good opportunity for them to also learn and have operating experience in connection with fracking operations. Argentina, as we know, it has a world-class shale resource, mostly for gas, but substantially for oil as well. And the Chinese investment in Argentina are serving to obtain a lot of important know-how in the development of shale resources that then they can apply home. China has a tremendous amount of shale resources as well, but not all shales are the same. The rock in China is harder to crack, so to speak, than the rock in Argentina or the shale in other places. But nevertheless, it's important for them what they're doing in Argentina. And also important in connection with oil and gas is the payment in kind arrangements that they have in place. Venezuela and Ecuador are a good example. And even though in the case of Ecuador, China has in-country equity investments in the production of oil in that country, they also obtain a fair amount of oil through these payment in kind programs, whereby China advances funds pursuant to a loan facility, which are used to contract Chinese companies to develop infrastructure projects in the country, but the repayment is in kind at relatively favorable terms. There is a lack of complete transparency in all of those contracts, but what we can ascertain is that there are advantages for China in exchange for advancing these funds. In many cases, some countries put themselves in the position of resorting to China as the last lender willing to advance funds to the country if they're not willing to undertake certain reforms otherwise to access funds from other lenders. And this has been very advantageous for the Chinese as well.
Thank you so much, Jose. That's really quite interesting. And I do wonder, I mean, we've seen somewhat of a decline in the use of these oil-backed loans, but one does wonder whether there will be some new ones coming out. And Evan, I don't know if you know if the 2.4 billion to Ecuador is in fact oil-backed or not. I think it's not, but yeah, we'll see. And certainly there's been considerable amount of oil shipped to China or other on the international market, right, as a result of those particular agreements, especially with Ecuador and Venezuela. So really quite interesting. Thank you very much for that. Let's turn now to Evan, and let me ask you, also the same question, but about many of the other critical sectors, right, that China tends to be interested in Latin America and the Caribbean: mining, of course, transport infrastructure, technology we've talked about a little bit, but I'd be interested in your insights there as well, because of course the tech is wide ranging. We're not just talking about 5G, but a lot of other applications, and of course some of the surveillance technology and other things have already been mentioned. So where do you see Chinese companies looking to invest if they indeed expand their operations in Latin America and the Caribbean, or maintain, a sort of level of engagement that we've seen in the past? Where will they go?
Thanks, Margaret. Thanks for the question and for the opportunity to be part of this morning. And some great comments from my co-panelists. I just want to highlight, I'm very glad to hear the talk about the importance of Digital Silk Road as a new initiative, and also what Jose just pointed out, the role often of Chinese investment as learning and advancing their own technology goals. I think these are some really key points. But in general, as you pointed out, I see Chinese investment across the board. Some sectors have different strategic incentives versus others. But as you pointed out, when you look at mining, of course, a lot of attention has been given to traditional mining, of course, at Peru, with about $15 billion in projects that are still continuing to go forward, including 5 kind of mega projects, which means that China now accounts for about 25% of Peru's copper and 100% of its iron exports. And I think those are virtually across the board expanding, but it's also in other areas. So for example, lithium, and of course the Tianqi investment in Chile has gotten a certain amount of attention, but to a lesser extent, but equally as important, the Ganfeng major investment in lithium in Argentina, as well as the investment in Mexico also by Ganfeng. So I think you'll see those types of non-traditional mining investments becoming increasingly important. Other mining sectors as well, of course, Shandong has a major gold play in Argentina, prospects for mining in Ecuador in areas such as the south, as Zamora Chinchipe to continue to advance. In other smaller but important mining, so for example, some of the advances that have been made in the Caribbean with mining projects, for example, with the Gisco project in Alpart in Jamaica, among others. But as you pointed out, it's far more than just that. You referred to transport. Especially on transport, I'd like to underline the importance of public-private partnerships. So it's not just about government-to-government deals. So to that extent, I see very important the recent proposed acquisition by China Communications and Construction Corporation, CCCC, which is the parent company, of course, of China Harbor, as well as Shanghai Dredging. But the importance there of the 30% stake in Moda Engel, the Portuguese firm, which can give CCCC enormous advances in their understanding of how to do PPP. Already has a big presence in Latin America. And so when you look at some of the existing advances, for example, not only phase 1, but future phases of Train Maya, in which they already have a role, the major play for a role to displace John Dunol in the dredging of the Paraguay and Paraguay River corridor, something that's strategically important to the soy output of 5 countries. That has a lot of importance, again, with CCCC and that. The advances of ports, Claudia touched on this a little bit, but especially after Lava Jato, major advances in the Brazilian port sector with TCP Participações, with São Francisco do Sul, with the big Porto Central combined project, among others. And of course, Peru, the very significant development of the port of Chancay, and the question of whether that will be equally accessible to non-Chinese firms. We mentioned briefly the importance of hydrovias, but it's not just the Paraguay-Paraná River corridor, but it's also the Hydrovia Amazonica and others. You mentioned, again, telecommunications. Very glad that Digital Silk Road was mentioned. And really, I'd like to emphasize, again, it's not just the infrastructure and components of Huawei and ZTE, but it's also e-commerce platforms, Tencent, Alibaba, non-traditional financial entities such as Fosun, which in Sao Paulo and other places have made major advances in Brazil. As you pointed out, security and smart city architectures. Also, we talked a little bit about energy generation and transmission in Brazil, also now expanding with the acquisition of Luz del Sur in Peru, with a major stake in Lima. Also, Naturgy, a major acquisition there, with a major impact in the presence and the energy grid in Chile. But more broadly, clean energy, solar, wind, hydroelectric, of course, the big Cachari solar project in Argentina, which is supporting the lithium mining, among other things. So again, I really see it as across the board, and I think it's important to understand not just the breadth of the advance, but the way in which advance in one area actually supports the Chinese position in other areas. So demand can be used to leverage winning projects, et cetera, not unlike the arguments that were made about what Bill Gates was using Microsoft for in control of to advance Microsoft software by controlling the OS and things of that nature. But it's a very broad advance, I see.
Yeah, that's such a critical point. I think that we see a lot of this sort of energy investment or electricity transmission related investment or acquisition actually supporting other projects, perhaps in the mining sector, for example, in Peru or in Bolivia, as you mentioned, or other places. So there's a lot of interconnectedness, right? That is not immediately apparent in a lot of these investments. Evan, let me just one quick follow-up question. I mean, what do you think? So in 2019, we saw a real surge in greenfield investment, right? It was really quite remarkable. A drop in mergers and acquisitions, but a surge in greenfield investment. And a lot of that was because of the Shanghai Shanghai port project, right, in Peru. That was a big portion of it. But I mean, these projects that were negotiated in 2019 and, and everything seemed okay at that point. What's going on? Have you had a chance to kind of see where they stand? Is there a sort of protracted stasis here, or is it something that will maybe a wait and see, and we'll see kind of some development in the not too distant future?
That's a great question, Margaret. My sense is it depends on the country and the situation. So, for example, in the mining sector, I mean, there was some pause with COVID-19, but in Peru, most of the major mining projects have continued. In part, it depends on the Latin American, regulatory environment as well. So I think it really, a lot of it depends across the board. And as you pointed out, greenfield, traditionally, what I've seen is in mining and petroleum, the Chinese have used taken advantage of their strong cash positions and access to finance to enter sectors or obtain a presence where there's a strategically useful technology or experiences. And so again, it was if there were mining plays that were already developed, basically buying the rights to those or buying the firms who had already mapped them out. I think with again, as Claudia pointed out, a lot of things with Lava Jato, as firms such as Odebrecht were selling off assets, and then you have Chinese firms picking up generation assets like Chagya, of course, State Grid. In general, buying into the sector in important ways, but then once in the sector, using the capital to expand out bit by bit. In other sectors, for example, in telecom, companies like Huawei and ZTE, it's been more about building the presence from the ground up, but that's just the nature of the sector, the sector itself. And of course, with your own work on Chinese agricultural investment, as you remember the story, the initial attempt to do some major projects on their own. So Chongqing Grain, among others, in Brazil, which were largely stymied by resistance indirectly from ADM, Dreyfus, Bunge, and Cargill, but then turned around and adopted a different M&A oriented strategy, again with the COFCO acquisition of Nadera and Noble, and ironically now using basically demand from China, channeling through the companies which they now own to give ADM and Cargill and Dreyfus and others a run for the money. So
right.
I see the pattern shifting, but M&A has always been I think one critical part of a broader multidimensional strategy.
Absolutely. And I think this all underscores the remarkable flexibility that we see, in terms of China's approach, both in the political space and the economic space in Latin America. So let me pose a question to all of you, just some brief, observations from each. Prospects for additional Chinese investment are, of course, dependent on a wide variety of factors, including China's own economic conditions, of course, as we've mentioned, the domestic political economy of Latin American countries, which is sometimes facilitating more in the way of Chinese engagement and other times preventing of it. And then, of course, a range of other political and external factors or dynamics, and this of course includes the U.S., and U.S. policy on China and Latin America. But COVID-19 of course is a really critical factor here that will shape engagement, and has already, as some have mentioned, affected trade patterns and stalled some investments. So to what extent will the extensive and still emerging economic and social effects of COVID-19 in the region give Chinese companies pause when pursuing new opportunities in Latin America and the Caribbean? So let me start with Jeff. Zhao.
Thank you, Margaret. I think two parts, to that question. First, in terms of economic, political and social pressures brought on by the pandemic, looming large is the threat of OFAC sanctions and other U.S. sanctions on Chinese entities doing business in the region. Although the sanctions may arise from alleged activities that are that may be completely impertinent to the company's investment in Latin America and business flows in Latin America, there's a substantial overlap, and that is by no coincidence, of the list of targeted entities. And if you would make a list of entities from China that are substantially invested in Latin America in various sectors, including energy, telecommunications, healthcare, etc. So I think that's going to be the story, a big part of the story going forward. is how the new U.S. administration, or whether the new U.S. administration would in any way alter their approach, and that remains to be seen. But the tensions will remain, regardless of who is in charge on both ends of the Pacific. In terms of changes in dynamics on the ground in Latin America, I think there's been a pronounced decline over this period of time of governments providing sovereign guarantees and support, from entities like export credit agencies. So this combined, with changed political social circumstances, these have certainly put a lot of downward pressure, on Chinese investment in the region in particular. So I think there's certainly the pandemic has created much uncertainty, but as I mentioned before, it's also an opportunity for both sides to sort of recalibrate their approach.
That's true. Yeah. And certainly so many of the deals that we've seen, struck in recent years have been predicated on this, or, required these sovereign guarantees. So it will be interesting to see whether things do in fact move forward without those, or if there's some alternative solution. Claudia, let me ask you the same question.
I think one thing that weighs very heavily on Chinese decisions are how China behaves different from other investors. And I think China looks much more to the long-term impact of these investments than to the short term. So in the case of Brazil, I think the short-term outlook is bad. The economy will contract 5.8% this year, will grow 2.8% next year with LAC, and a little bit more than 2% in 2022. So it's not a remarkable performance. The fiscal situation in Brazil is very bad. We don't know if we will have the reforms that we need or not. It seems that not. Inflation is coming back. So from the macro point of view, the situation of Brazil is not good. But at the same time, Brazil became very cheap. And our currency lost more than 40% this year. And as we saw, as Eva mentioned, we saw how in recent past, China used the opportunity opened by the car wash operation to increase its presence in Brazil and to buy assets from companies that were hit by the corruption scandal. So I think on balance, the long term and the opportunities that Brazil will have in terms of investment will favor Chinese investments. And I think Brazil is important for China. Brazil and other Latin American countries are important for China, as Xinjiang mentioned, and Eva mentioned, as a learning place, and also for the deployment of technology, Chinese technology. And I think Brazil gives one of the best examples with the transmission lines that State Grid built connecting the Belo Monte Dam in the Amazon to the Southeast consumption centers. They have 1.29 thousand miles and 1.6 thousand miles, are two huge transmission lines. And they were the first ones outside China to use a technology developed by State Grid called ultra high voltage. It's a technology that allows for the transmission of energy in very long distance with high efficiency, with very low energy lost in the process. So I think these kind of things are important to China. And Brazil, given its size, it is important also as a consumer market for Chinese products. It is important for a learning experience for Chinese companies. All the companies, all the electricity projects, the oil projects, the companies had to participate in public competitive bids to get the project. And in most companies, almost all the employees are Brazilians. And we have Chinese in the top levels, but very few. So I think it's an opportunity to learn the entrepreneur culture of another country, to develop skills in sustainability, social responsibility that are going to be important for China in the Chinese companies to internationalize.
Thank you, Claudia. I mean, and it really is remarkable just the extent to which Brazil has continued to be the top destination, right, for Chinese, excluding the tax havens in the Caribbean, of course, but for Chinese foreign direct investment in Latin America, despite political shifts and everything else. And I think your point is well taken, that there's still a lot of attractive features for Chinese companies. Let's turn to Evan for an answer to the same question.
Absolutely, and I think my colleagues, especially Claudia, makes a very important point that you have to differentiate between long-term and immediate term. So obviously, in the immediate term, especially with the Chinese PPE and other engagement, there's been a lot of goodwill that's been achieved by the COVID response. It varies by country, but also in the short term, the pandemic, I would say, has caused a lot of pause. You yourself mentioned the significant decline, according to Sapao, in M&A from other parts of the region. Obviously, there's a lot of uncertainty with the Latin American market. It looks like a lack of, frankly, Latin American government money right now to do near-term infrastructure spending, paralysis of major decisions, and frankly, a lack of market demand. And so Chinese companies do operate by, market principles, at least to some degree. And so you certainly have the Chinese, like others, pausing right now. But what I see over the long term, as you yourself pointed out, Margaret, this year, a 2% increase in the Chinese GDP, next year, maybe as high as 8.1%. Number one, that makes Chinese demand and the leverage that comes with Chinese demand for advancing its position a lot more important. So Brazil is an agricultural exporter. Even during the Wuhan shutdown, you had an increase, I think, of 11% in Chinese purchases of Brazilian soy, and that only continues. You have Latin American supply chains that are shuttering. Some will never actually come back online. That will actually expand opportunities for China to penetrate, despite all the talk about nearshoring. Number three, as we've talked about already, you have increasing possibility for expanding a long-term presence on the ground as basically US and European and other Asian companies look to shore up their own financial positions elsewhere, just like they did after the 2008-2009 crisis. And so basically, as they sell off Latin American assets to focus on more attractive markets, ironically, like Asia, Chinese companies are well positioned to come in and expand positions, especially in strategic sectors, as they're already doing. We talked about Moda Engel, we talked about Naturgy in Chile, and I think we'll continue to see that. On top of that, and Margaret, you mentioned the Ecuador, the $2.6 billion expansion and financing there. There are a lot of projects where needy Latin American companies will look to China and basically be willing to sign up for Chinese projects, maybe on terms that previously, when they were fiscally stronger, they wouldn't have. So again, I mentioned the future phases of Trade Maya. I mentioned some of AMLO's ambitions for infrastructure investment without private sector investment with Pemex and CFE in Mexico, et cetera, et cetera. And frankly, those will be increased also by the political trends we see right now, basically the return of the left. So a lot of the projects in Bolivia that were put on hold with the ouster of Evo Morales now are potentially reevaluated despite some difficult experiences there. As you have President Arce coming back. Argentina, again, a lot of the things that were taken in a different direction during the administration of Macri, I think especially with the hydroelectric and with the nuclear power, with the Atucha complex, et cetera. Again, I think you're starting to see prospects for those type of projects to accelerate with the Fernandez government, with the Peronists in Argentina. And of course, questions of what will happen in February with elections in Ecuador and Peru in April 2021, et cetera. cetera. So I think there are opportunities, both political and economic, for China to strengthen its presence on the ground. But the thing that I think, and I think my Chinese colleagues already know this as well, this will be much more complicated than 2008, 2009, because those Chinese companies will be expanding their presence with Latin America that will have a greater profile of crime and disorder, a greater profile of social mobilization, a greater level of political unpredictability. And just like the Chinese companies that came in 2010, 2011 had to deal with that and learn, as my colleagues have talked about, the Chinese companies will have to learn how to adapt to that new environment. And everything from dealing with labor, environmental issues, local government and community sensitivities, and frankly, some other problems. For example, the contracting of local consultants and probably local security firms, which continues to be an issue in dealing with the region. So lots of changes that will give us lots of things to talk about in the months ahead.
Right, and I mean, I think that's a really critical point and sort of addresses one of the questions that we have in the Q&A right now, which is that, what are sort of the factors that will be mitigating or causing problems for Chinese investments on the ground? And indeed, they will have to adapt, but some may not be able to do so successfully. And of course, we've seen, failures of projects as a result of local resistance over time, less so now than perhaps in the past as this learning process takes place. But yes, it will. I mean, there will be challenges moving ahead, and that's always important to keep in mind. Let me turn to Jose for the same question.
I see the pandemic as a relatively small speed bump in the grand scheme of things. It's not going to be a major deterrent to the ongoing investments of China in Latin America. The Chinese are being very clear-eyed, and there is a purpose for what they're doing. So one can distinguish, number one, procurement of natural resources, hydrocarbons, minerals, agricultural products, then exports from China. And it's no longer the exports of manufactured products. The Chinese are now exporting services and technologies. And that is opening up tremendously the opportunities for exports from China. And third, the acquisition of technologies back into China and know-how, which is also something that informs tremendously the types of investments that they're making in the region. And those technologies is not only cyber. I mean, it's technology sometimes in relation to very mundane things. There is a tremendous lack of goods and services that many millions of Chinese need to improve their daily lives. So certain agricultural know-how, certain water management know-how, disposal know-how, etc. There is a lot to learn and to apply back into China at all levels of the technological spectrum. So this will continue, of course, pandemic or no pandemic. And I think we're going to even see more of all of this because the spectrum of things that now China has to offer is increasing. As Chinese development and technological advancements go on, there is more for China now to offer. And at the flip side is more than China needs to keep improvement. So this two-way street, which supports all these engagements by China in Latin America and other parts of the world, is widening. It's becoming a wider street, and we'll see more of it.
Yeah, that's a really fascinating point. And I think, when we tend to think about Chinese overseas mergers and acquisitions for learning purposes, we tend to think about some of the more advanced markets, right? But indeed, I think there is a considerable component of what is being done in the Latin American and Caribbean region that would aim to achieve the same functions. And I mean, seed technology in Brazil is one area that really stands out, but there are plenty of others as well. So I think that's a very valid and extremely important point. Let me try with my last just few questions, and then we'll open it up entirely. I want to sort of address some of the excellent questions and points that have been made in the Q&A by our participants so far. So Claudia, sort of on the political side, as we consider the range of external influences on Chinese investment opportunity, do you think that possible changes in the nature of the U.S.-China, the U.S.-Brazil bilateral dynamic under Biden will affect Bolsonaro's interest in working with China, including perhaps on the supply of technology for eventual 5G deployment, or in other areas for that matter? Oh, yeah, I think you're on mute.
Sorry.
No problem.
My view is that Biden's victory might change Bolsonaro's calculus towards China. Like Brazil was very aligned with the Trump administration, and Bolsonaro kind of was repeated a lot of the hostility that we saw from the United States towards China after the coronavirus and before the election. And with Biden, I think we will see more friction between the United States and Brazil, especially on environmental area that Biden put central to his domestic and international agenda. And Bolsonaro is having a lot of problems in this area, and so far has not given any indication that he might change his policies. In the question of 5G, after Trump's victory, many of the Brazil's leading newspapers have stories saying that Bolsonaro was rethinking his opposition to Huawei and was more open to Huawei's participation on 5G network in Brazil. But yesterday there was another story saying that he will use executive order to forbid the participation of Huawei, which for sure would lead to this issue to the courts. Mm-hmm. Like Brazilian constitution gives national and foreign companies the same treatment. So I think the Huawei for sure will go to the courts. And in the end, I think what will define this is the pressure from the private sector and the economic logic of blocking Huawei. The private sector, especially the telecom operators, they are against a veto to Huawei. They say it will cost a lot of money and it does not make sense because it's not only to prevent Huawei from participating in 5G network, is to taking out all the Huawei's equipment that is already on the mobile telecom network of Brazil. And Huawei has a participation which is between 40 to 50% of the current network that Brazil has. So the telecom operators say it does not make sense in a country like Brazil that has profound need for connectivity, that it still has whole regions with very, very low connectivity, to invest money in taking out equipment that is already there. And the calculus is that this investment would be $30 billion, which is a lot for a country like Brazil that has the fiscal problems that Brazil has. Mm-hmm. So I think it's too early to talk, to know what the president's decision will be. But there is a clear division inside the government. There are factions of the government that are against a veto to Huawei. And among these persons is the vice president, Hamilton Mourão, that yesterday said that a veto to Huawei would make 5G much more expensive to Brazilian consumers.
Sure. So, yeah, and the providers as well. I'm sure are having suffering from a bit of whiplash as they watch, these debates develop and ongoing in Brazil about whether or not to include. I didn't realize that there would be the effect would also, imply removing Huawei equipment from 3G and 4G networks. That's not something that I realized was in fact the case. So quite extensive. Let me move on actually and ask Evan about his thoughts on U.S.-China tech competition. At present, right, and perhaps under a Biden administration, and how that will affect prospects for Chinese tech investment whether in Brazil or elsewhere in Latin America and the Caribbean. Do you see it there being a real mitigating factor here?
Thanks, Margaret. Great question. And I think, first of all, a big part of the problem is framing the willingness of many in the region to regard this as just some type of U.S.-China competition. And, Latin America, the traditional, we don't want to take sides. We want to benefit from China and benefit from the U.S. So I think one of the challenges for the incoming Biden administration is to redefine the way that this challenge is perceived. But certainly, I agree with Claudia that we may see a Biden administration taking a somewhat softer approach on the broader kind of U.S.-China strategic competition. But I think there are a couple things that would suggest that it's not going to be as rosy as some of the reviews that I've seen in the press would suggest. And again, coming from my own work at the State Department not too long ago. One of the things I can see is I think certainly you have the administration coming in with a pretty good understanding of the China challenge. I mean, that it may be what to do about it might be seen in a different way, but I think the understanding is something that fundamentally continues to be with us. I think number two, if you look at the people, I think you're going to see a State Department that from day number one and an NSC from day number one is working through the existing bureaucracy to actually effectively to make things happen. I mean, if you look at the picks so far, and again, Lord knows I'm from the other party, but the head of state, Anthony Blinken, I mean, he was the number two. I mean, he knows intimately that bureaucracy and how to work with it. Jake Sullivan was actually the head of my previous organization, the Policy Planning Office. So he comes in knowing exactly how to work the NSC, state link. I mean, even in terms of some of the sanctioned Treasury things, I mean, the experience that Janet Yellen has coming in. And frankly, I think the disposition to lower the temperature and coordinate more with our EU and Asia allies, actually may open some doors in some areas that were previously closed. So I think I think it's going to be a different type of struggle. I don't know if it's going to be better or worse, but certainly going to be different. And as Claudia points out, Huawei and ZTE definitely do have a very solid position in terms of cost, in terms of the technology, not just with governments, but basically as suppliers of services and goods to the key Latin American telecom, Movistar, Claro, Telefonica, et cetera, even to the extent that the little Vietnamese company Vitel in Panama, their backbone is actually Chinese equipment, the low-cost provider there. So as Claudia points out, I also agree that, with the pressure from the US, the 5G auction of Brazil was postponed, kicked back 1 year to this year. The question now becomes what will happen when it comes up again this year. But it's also about other things besides Huawei equipment. So it's about the cables, it's about the Chile, Hong Kong Trans-Pacific cable, it's about the Brazil Cote d'Ivoire, transatlantic cable. It's about other things like the setting of standards in strategic tech that will determine whether Chinese companies continue to lock in that that advantage. And I think we're likely to see more advances through strategic M&A, through MOUs with government, through continued support from the Chinese state, especially because we recognize that these are privileged areas. And I think at the end, I would say, I think there clearly will continue to be a Western, so to speak, pushback. But there are two big questions for me. Number one is how effective will the coordination be between the U.S. and partners like the Japanese, Nokia, the Koreans, et cetera. And number two, when it comes to put your money where your rhetoric is, how much Western support will there actually be? In other words, will there be actually the willing to provide funding and regulatory support if you say, okay, well, we want Brazil to go with the Nokia solution and not the Huawei solution. Okay, well, will we actually be willing to pay for that? And will Brazil be willing to pay for that? And I think those questions are, especially in the post-COVID environment where nobody has any money, I think those questions are less than clear.
Absolutely. Yeah. Thank you so much, Evan. Let me ask one more question, and then I'll pose a number of questions from our Q&A to all of you. But Jeff and Jose, if you don't mind, I'll ask you the same question. and really what I'm looking for is sort of a more global perspective here, right? If we do see a surge in Chinese overseas activity, right, in the coming months, years globally, will Latin America indeed be a top destination? Or do you think that, you know, there will be more of an interest in investing, for example, in Africa or in regions closer to China? So let me first turn to Jose, if you don't mind.
Today, Latin America represents a relatively small fraction of Chinese overseas investment overall. Depending on what numbers you look at, is anywhere between 8 and 12%, measured in a number of different ways. I would expect that proportion is going to continue. I would not expect that investments in Latin America are going to grow disproportionately relative to investments in other areas. We must remember that Chinese investment in developed countries actually takes the lion's share of Chinese investments overseas. And that's where there may be a little bit of a pushback as attitudes are evolving in the United States and now in Europe itself. However, it shouldn't be too measurable in terms of proportionate investments throughout. Africa is a very important destination for Chinese investments as well. That will continue as is. Latin America presents a lot of advantages to China, and that we have discussed, and deployment of technologies, obtaining of natural resources, obtaining of certain technologies. I would expect, Margaret, that overall the current proportions are not going to change substantially relative to each other on an ongoing basis.
Thank you. I think that's a very apt observation. Xinjie.
Thank you, Margaret. I think just to follow on what Jose has just commented on, which I completely agree. There's, in many ways, I think this will be driven by the sort of U.S. Stance toward containing China under the new administration, and how, and also the undisputed fact that Latin America is in the United States' backyard, and it's a much more sensitive region for sort of the traditional Monroe Doctrine centered U.S. than places such as Africa, where it's further away and it's more remote, and there's less, there's sort of a less of a information symmetry. So in many ways, I think what China is doing reminds me of the art of war in some ways, where the famous quote would be, all warfare is based on deception, right? What China is doing is effectively showing weakness when China knows that the opponent has strength, and trying to sort of circumvent and avoid the punches that the U.S. is sort of instilling right now. So part of that strategy, as executed, might be that China, on the surface at least, may decide to increase proportionately its investment in other regions rather than Latin America, and sort of adopt a wait and see attitude on what the Biden administration has in store. So I think that's point number one. And point number two would be in my opinion, the investment in things like healthcare, through the so-called Health Silk Road, the PPE, access to vaccines. It's a gateway to investments in other critical and in many ways untapped sectors of the Latin American economy, for China at least. Industries like e-commerce, logistics, transportation infrastructure, even small-scale lending. I think that these would give tremendous opportunities not only to the obvious players like Huawei and ZTE, who might be looking to Latin America as a region to make up for or counteract them being shut out of places like the European Union and very soon, the Great Britain and obviously the US, but also for players such as Tencent, Alibaba, and even ByteDance, who are engaged in these sort of what we may consider niche fields, but in China, on the ground over here, life revolves in many ways around the services that these companies have to offer every second of the day. So I think there's tremendous untapped opportunity in Latin America, and strategically, it's just a matter of how China decides to untap it.
Absolutely. And I mean, the rapid expansions of Didi in Latin America, I think, is ample evidence of that as well, right? So, in any case, well, thank you so much. Those are all really fantastic observations, very illustrative. So let me pose just a handful of questions first to all of you. I'll pose 4 or 5 questions, and then we'll give you each an opportunity to respond to those that you feel you may be able to comment on. Our first question is whether there's anything in particular that any of you would like to say about the Caribbean region. It's been referenced a couple of times sort of in passing, but if you would like to talk about investment in the Caribbean region, prospects for investment there, and what that might look like, I think that could be helpful for those on the line who are from the Caribbean region or interested in studying it. Another is regarding the sort of Ecuador/Peru fishing controversy that we've seen of late. And let me relate that more to sort of perceptions of China in the region, popular perceptions, right? Which in general, based on, Pew studies, are more favorable, have a more favorable view of China than many other regions. But how do you think, perceptions of China at the local level in particular will impact prospects for investment? Another is on China policy, the dual circulation policy, whether or not that'll have an effect on overseas investment in any particular sectors. There was one question about auto manufacturing, and broadly in reference to sort of nearshoring activity and a real push for that. Will China, seek some opportunity as, in fact, auto manufacturing relocates or, either, or in many cases expand already, somewhat extensive investment in the auto manufacturing sector in Latin America in particular. For Jose, there was one question, just a little more on Vaca Muerta in Argentina. Where does that stand right now, and to what extent is China expressing considerable interest? And let me leave it with that, because that's quite a few questions already, and we can just go in order, perhaps, if that would work for everyone. Jeff, do you want to start us out with any one of those or two?
No problem. So I think one of the overarching issues here, and I think the Caribbean was mentioned, is how sort of taking the U.S. out of the equation for now. How these countries will approach the recognition of Taiwan. Because this is very obvious, but a lot of the Chinese investment and decisions to open up to a certain country, it's basically premised on the fact that any given country must recognize the People's Republic of China as the sovereign government of China. So we've had recently multiple countries in the region that have shifted their allegiance, to the PRC, and that's been big news over here, and it has been extremely welcomed and has been followed by steady inflows of investment into places such as Panama and the Dominican Republic. So it remains to be seen, whether certain countries may, for diplomatic reasons or for political reasons, shift their allegiance in the coming years, and that's going to substantially affect, how China decides to invest in the region. That's going to be a material factor in how China decides to invest. I think in terms of automotive sector investments there. I think our esteemed panelists just made an excellent point, which is that China's investments in Latin America have advanced to a stage where it's no longer the sort of very low tech, manual labor type of engagements, but rather it's extremely high net worth, high value added investments that are quite substantial and have far greater impacts on people's livelihoods and in the economy. So I think maybe casting the issue of manufacturing aside, because that's a big question that just poses significant issues that differ by individual country in Latin America. We've seen issues with China seeking to go into the market in Mexico, for example, various Chinese brands, and similar issues in other parts of Latin America. But what we're seeing is sort of this new gig economy take over in Latin America, where the rise of Didi in a lot of countries is evidence of that, and I think this cannot be discounted, sort of the intangibles that we think about, payment systems, surveillance obviously is another component of this, where Latin American governments are very eager to get access to China's technologies that underlie its QR code system, for example, for determining whether someone has been exposed. Personally, I've had colleagues say that they're very interested in knowing more about sort of the technology and the intricacies behind the system. So I think it's just it's a very hard a big web to untangle, but there's really a lot to be said in sort of the new economy areas as well, and how Chinese enterprises can contribute to that.
Thank you so much. Let me turn to Claudia.
Okay. No, in the auto manufacturing, in Brazil, I think in Latin America in general, we don't have much investment in this area, no. And Brazil is one of the countries that has the largest amount of Chinese investment in this sector. And most of the early years were not successful. But recently, Chery made an agreement with the main car dealership in Brazil. And they partnered together to promote Chery cars. And they became one of the main announcers in big newspapers in Brazil. Every Sunday there is pages and pages announcing Chery cars, and we are seeing an increase in sales, but it's still far from challenging the other auto manufacturers that are in Brazil. Now, the European, the Japanese, the Korean, and the Americans. And in the question of the image of China, this issue of the fishing boats, I look at the newspapers from Peru, Ecuador, and Chile, and all of them had a lot of stories, because it was not only Ecuador, no? It was also in the coast of Peru, in the coast of Chile, and I think it was very bad for Chinese image in these countries, no? This image of a predatory country in their door, no? And in Brazil, I think China's image also suffered as a result of Bolsonaro win and the anti-China rhetoric that his base and he himself sometimes, but his son especially, adopt. And I feel it in our events. Sometimes we suffer like an attack on YouTube of people posting negative comments about China. And there was recent a poll asking Brazilians if they would take vaccine from specific countries. And the vaccine from China was the one rejected by most of the people, more than the Russian one. So I think this gives a proxy of the perception in towards China. And I know people that say, oh no, I'm not going to take a vaccine from China. I say, we already take vaccines from China. Our flu vaccines are from China. We import. One interesting thing, our import of medicines from China this year grew almost 80%. And it was obviously connected to the coronavirus. And now this year, Brazil imported more medicine from China than from the US. And one of the most important, the richest Brazilian state, which is the state of São Paulo, that responds for 1/3 of our GDP, they have a partnership with Sinovac to produce the Chinese vaccine in São Paulo. And this became a very center political issue in the relationship between Bolsonaro and the governor of São Paulo, who is a potential candidate against Bolsonaro in 2022. So China was caught in this political infight too.
Sure. Plenty of political rationale influencing a lot of this decision making as well, including in other countries in the region. So we have just about probably 1 or 2 minutes left. So Jose, did you have any thoughts on any of these questions?
Yes, I'll address very quickly the Vaca Muerta question, if it's okay. Vaca Muerta is far, far, far from realizing its full potential. And it will take a full 1-hour webinar to discuss and examine Argentina's energy policy, and Vaca Muerta in particular. But Argentina, suffice it to say, through government policies, Argentina turned itself from a gas exporter into a gas importer. Not because they were lacking any resources in the ground, as we know, given the magnitude of Vaca Muerta, but it was due exclusively to government policies. That set back Argentina years in terms of acquiring manpower, technology, and capital for infrastructure. So Argentina is lacking all of that that is necessary to fully develop Vaca Muerta. And it's going to be a long time before Argentina can develop that resource. Connecting all that to China, China, nevertheless, through its investments there, is learning a fair amount of what it is to exploit shale rock for hydrocarbon production. But the gushers, the real potential here is yet to come. And it's regrettable what has happened in that country concerning its hydrocarbon resources.
Thank you, Jose. That's very, very helpful. And then Evan, let's give you the last word.
Thanks, Margaret. Just very briefly, first of all, in the Caribbean, number one, beyond the size of the market and the resources, China regards the Caribbean as strategic, just as it sees the island chains off of its southeast approaches as strategic to it. And so China wants to be there without threatening the U.S. Number two, obviously, there's a double-edged sword with tourism and hotels in the Caribbean. On the one hand, places like Baja Mar have taken a big hit with the loss of tourist revenues, but at the same time, that means that Chinese investment is needed all that much more with the prolonged loss of U.S. and European tourism. Number three, I have to recognize that the Caribbean governance institutions, because of the small size of the islands in general, are typically vulnerable to kind of informal dealings, and that continues to present a problem. Number four, logistics. Important to recognize the Caribbean as a regional center for logistics serving the Atlantic seaboard, Panama Canal, etc. Looking at the importance of places like Freeport, the port of Caicedo in the Dominican Republic, others in Jamaica, etc. Number 5, the question of Taiwan. I think the situation is stable for now. I think we're likely to see flips in Central America before that, specifically because St. Vincent and the Grenadines, St. Kitts and Nevis, et cetera, have all actually had elections that have renewed the status quo that continues with Taiwan. And I think Haiti, frankly, at the moment, it remains too chaotic to be in the position to flip. But then finally, I think that a number of key states where China has a strong relationship are now in the position to press forward. In Jamaica, with the re-election of Prime Minister Holiness in his government, and again the very pro-China activities there. The always interesting positions of Keith Rowley and Trinidad and Tobago, especially with opportunities both for oil and maritime manufacturing and things like that. The big question with where things will go with Cuba under a Biden administration, because essentially if there's a reopening or an easing of sanctions, that might ease up interest by the Chinese as well as the Russians and others are putting more money in Cuba. And of course, pro-business orientation in Dominican Republic, not unlike what happened with Macri in Argentina, although initial indications have been that the Abinader government remains a little bit reluctant to look at China. And just very, very quickly, Ecuador-Peru fishing. Number 1, I think it shows the importance of strong governance. Interesting how the Chileans right now have been putting out an all-stop effort to monitor the Chinese fleet as it passes through Chilean waters, as it may be a lesson for other places to manage the deep water challenge. I think it also shows some of the hazards of China's newly assertive wolf warrior diplomacy, because in many ways it as Claudia suggested, it kind of embarrassed the Chinese a little bit when you had these ambassadors so strongly saying, oh, well, the Chinese fishing fleet isn't doing anything. And then you had basically RF radar tracking that clearly showed the Chinese ships were actually in the Galapagos, the EZ and other things. And so I think, in a market where information is not controlled, information denial sometimes can backfire. And then finally, just real quickly on auto manufacturing, obviously, the major places where China has done CKD manufacturing, like Brazil and Mexico, those are one of the sectors that have taken the biggest hit. But as Claudia pointed out, the price competitive nature of Chinese cars on the low end, she pointed out to Chery or BYD or others, so in a difficult market, it's one of the most promising. But it's also not just traditional autos, it's new technologies such as electrics with BYD and others. It's buses, Yulong, Hutong, it's also construction. So XMG, Sany, and Liannang. So a lot of related industries that it's not just auto manufacturing. But as I think things pick up post-coronavirus, you'll see only at that point a return to strong Chinese presence in those sectors.
Thank you all so much. Well, that concludes, we're just slightly over time. That concludes our session. What a really fantastic panel. So much terrific information and a lot of sort of very helpful sort of foresight as we look at to try and determine what precisely will happen in the coming months and years. So thank you, Evan, Jose, Claudia, and Xinjian for your excellent interventions. And to everyone else, thank you for participating. Please stay safe. And we'll hope to see you all back at the dialogue virtually very soon. Have a wonderful day.